there, you're with BloombergQuint, and we're going to answer the big question on what happens to your crypto currency, crypto asset investments, NFT investments in the next 20-25 minutes. To answer the fine print on how the crypto tax will be applicable, I have with me two leading lawyers who we also want to know from what have they done between 1 p.m. to now with their crypto investments. Vivek, Gupta, and Badri, welcome to BloombergQuint. To the both of you, my first opening question, Vivek, I'll come to you. And we're going to sort of try and understand, A, what is the nature of this tax? How will it be implemented? And lastly, what happens to existing investments and what happens going forward from April 1st, 2022? Vivek, first question to you. The category is called tax on income from virtual digital assets. Now, as a taxpayer, I can have investments in mutual funds, in shares, in land, in real estate. The terminology which we are all used to is tax on gains. That is not the language here. Can you help us understand what the import of this language is, which is tax on income from virtual digital assets?
Sure. So that's a great question. The way the government seems to have brought this tax in is they're not subjecting this tax to tax under the head capital gains. The reason why we are accustomed to reading tax on gains is because all taxes for everything that you mentioned, stocks, land, mutual funds, etc., are all subjected to tax as tax under the head capital gains. This tax that has been brought in is a very specific tax. It's tax on virtual digital assets or crypto. And this tax will be levied at the maximum marginal rate, irrespective of period of holding. So there's no short-term, long-term. All concepts that belong to capital gains, therefore, don't apply here. This is tax which will be charged at 30% at the maximum marginal rate plus surcharges. Only one deduction will be permitted, which is the original cost of acquisition of the asset. So let's say I acquired the asset at 100 rupees. I sell it at 200 rupees. Whether I hold it for 1 year, 2 years, 5 years, 20 years, does not matter. 200 minus 100 will be my income, and that will be taxed at 30% on a full income tax basis, 30% plus surcharge on a full income tax basis. No offsets shall be permitted against it. So the reason why it's not under the head capital gains tax is the fact that the government did not want to get into the entire framework of capital gains tax. There's a certain framework of advanced tax there. There's a certain accepted framework of expenses being allowed, of capital gains being computed in a certain way, indexation being permitted, and so on and so forth. They're saying it's a specific category of asset. I'm saying it's ordinary income from here and on, taxable at maximum marginal rate. Which is why you're not hearing the words gains. You're hearing the income.
Okay, Badri, the sort of, again, I'm going to get into the language because we have the benefit of the fine print now, so why not take advantage of the two leading tax lawyers on the show. Badri, it says where the total income of an assessee includes any income from the transfer of any virtual digital asset. Again, it doesn't use the word sale. Is it sort of, am I reading too much into it? Or are there implications of the use of word transfer? Does the use of transfer include or sort of lends itself to include a larger universe of entities dealing in crypto assets? Weigh in on this, please.
I think whenever as lawyers we use the word sale, typically we always use the word sale for money consideration. So that's where the Sale of Goods Act comes into play. So you typically will find sale of goods, sale of services, where typically there is one leg which is the goods leg and one leg which is the money leg. But here they recognize that if you see, for example, further down, they talk about exchange between different virtual currencies, which are typically in the nature of barter, or at least not for money consideration. So they want to cover a variety of such transactions, which are beyond merely sale for money consideration, and money as we understand it to be, right? Which is Indian currency or foreign currency. Really what they want to say is, if I sell for money, we will cover it. If you transfer for other cryptocurrencies, made gains or losses based on that, we will cover it. Okay. And then, of course, any other barter that you do with respect to such goods vis-a-vis other services that you want to purchase. So all of these are inherently getting caught in the word transfer. That's the reason why they've used this word strategically as a transfer of thing, rather than use the word sale to restrict it.
Okay.
And I
Vivek,
just add
yes,
here,
please go on.
I fully agree with Badri. You would also note that the word transfer is defined under the Income Tax Act already. So that particular clause says transfer includes. It does not say it means. It says transfer includes sale, exchange, relinquishment, and so on and so forth. And then there's a full definition. So the use of the word transfer is very deliberate, as opposed to use of the word sale.
Sure. Okay, I'm pretty sure by now most of our viewers would know what the broad provisions on virtual digital asset tax are. But some of you who may have not read the fine print as yet, I'll highlight the key changes for you. Any income from transfer of a virtual digital asset, and they've defined virtual digital asset in the finance bill. They've also kept the option open to further add categories to this definition if those assets, as we know today, don't exist. So any income from transfer of virtual digital asset will be taxed at 30%. No deduction will be allowed except cost of acquisition. Goes back to the example that Vivek gave, 200 minus 100 cost of acquisition. Third, loss from sale of virtual digital asset can be set off only against the gains from the sale of virtual digital assets. Vivek and Badri will explain this to us. Gift to be taxed in the hands of the recipient, and there will be a TDS applicable at the rate of 1% above a certain threshold. Vivek, let me come to you with the third sort of leg of what this provision is, which is the how to deal with the losses, if you have any, when you've sold crypto assets or NFTs. How will those get accounted for?
Okay, so see, first of all, let's understand that the government views this category of assets almost akin to speculative losses and gains. And I think that's the way the finance minister also, if you hear her speech, also alluded to that. So she did not call it speculative, but she said period of holding and so on. Some such words she used. I don't exactly recall what word she used, but she was alluding to the fact that these are like speculative assets, and therefore the government has, in a sense, brought it to tax also within a similar kind of framework, which is why they say losses on crypto cannot be offset against anything else, against any other source of income. One interesting aspect, and I don't yet know, it's too soon after the budget, I don't know if Badri has a point of view on this. One interesting aspect on this is, while you very clearly said losses on cryptos can be offset against gains on cryptos, I'm not sure that the wording is quite so clear, because the wording of the main section actually says that no loss, no allowance, nothing shall be offset except cost of acquisition. Now, therefore, does that operate as a restriction to say loss and gain will be computed for each sale of a crypto asset separately, and therefore even inter se, the losses and gains cannot be offset? I'm not so sure. I had a read on the provision, and my initial reading was that perhaps the intent is you just capture all the gains at one level, subject them to tax, and the losses just vanish. Now, I don't know what Badri's reading of the fine print is, but I'm happy to be corrected here.
No, I think you've kind of hit the nail on the head. So if you look at these two provisions, the first provision talks about no expenditure except cost of acquisition or allowance or loss, okay?
Yes.
Under any provision. But if you look at B, which is with respect to set off against the other this thing, it uses the word any other provision, okay?
Yeah,
so it seems to suggest, if you look at B, that losses within that may be allowed, but losses with respect to any other income may not be allowed. That is one gray area already that we see in the use of the word any other provision in the subclause B vis-a-vis subclause A. That is one. We are having this problem when it comes to gaming laws already, okay? Where, for example, when I'm playing two games and I win something in game A, whether I can set off against the loss under game B, okay? And this is an actual litigation, an actual issue which is going on in a similar area. You'll find that the provisions are very similarly worded with respect to gaming laws and betting and gambling in that regard. I agree with Vivek that there is a doubt with respect to, for example, I have a Bitcoin and I've made a profit on it, I've got Ethereum and I've made a loss on it, okay, in the same year. Assume, for example, you don't have any other complication of years and things like that. Whether I can set off, because I've sold this as a block. I've sold 10 Bitcoins and 4 Ethereum together as one block. Whether I can cover it as individual transaction, that is on Bitcoin, I've made a profit and therefore I'm liable to make this, or am I to say Bitcoin to Bitcoin and then Ethereum to Ethereum? It makes it even more complicated. I may buy Bitcoins at different times, okay? And then how do I kind of link one with respect to the other, okay? Similarly, Ethereum at different times. Will it be FIFO? Will it be LIFO? How will it be? Those are other complications as we get into it. But at a fundamental level, whether it will be at a transaction level, or will it be at a block level, or will it be income in that year with respect to all the transactions related to that year, is what we will have to see. But like I said, I'm still reading this fairly closely and trying to come up with an answer. But what Vivek says is not unreasonable. A tax authority can take that view and say, I will give up all the losses. I'll only income from the sale of profitable transactions, okay, is what you need to pay tax on, which can be absolutely devastating, because you could have an overall loss and you may not have money to actually pay the tax on these transactions. But yeah, I think very valid issue raised by Vivek and you, Paiswini.
Okay, so Vivek, do we have a comparable asset? Sorry, before you say anything, answer this as well. Do we have a comparable asset to assess? I mean, Badri mentioned he's facing these issues already in, let's say you won in Rummy, you've lost in poker. Can you offset the loss from one of the games with the other sort of other's profit? Do we have an asset where we know how it's being taxed and is comparable to what we are now facing with this virtual asset category?
Paiswini, this is a very specific provision brought in as 115 BVA. Actually looking at some other provision and then trying to interpret it is not really in order.
Sure.
The words used are, so I'll tell you where my trouble is. In the main charging section, the words used are no expenditure, no loss, no allowance, except cost of acquisition. So let's say, and he gave the example of two kinds of digital assets. I say I have 2 Bitcoins. Okay, I sell them both at different points in time during the financial year. On one there is a loss, on one there is a gain. Now it's part of the same block. But what is he saying? First, when I sold the first asset, as on that date, I'll compute the gains on that sale. I'll compute the income from that sale, not gains on that. I'll compute the income from that sale. The income will be computed by applying the main provision which says no losses, no expenditure, no allowance. And therefore, the income will be the income which is 200 minus 100 in my example. Yeah. Let's say on the second transaction, I get a 40 rupee loss. Where is the provision which allows me to offset the 100 against the 40? There is no provision in law.
Okay, so the memo is something I think was hinting towards it, but the charging provision or the specific language doesn't give you that window to interpret.
And see, not just the memo, even when the finance minister spoke about this, she said the losses will not be allowed to be offset against any other income. That is the word she used. So when we got out of the speech, my first reaction was that losses inter se within the category of digital assets, virtual digital assets, will be allowed to be offset against one another. But when I read the law, which is what will be finally interpreted and applied, I find that there is difficulty in that interpretation.
Okay, got it. So there is one big sort of question mark on what happens to losses. Do they get accounted in your calculation when you are totaling your profits minus your loss? Can you even do that? That's one big question mark. But the other big question is that because I go back to it says income. So there could be individual investors who are doing the kind of trades or kind of investments that you two have detailed as examples. There could be exchanges as well who will also derive income from running these exchanges. Is the intent to cover those entities as well in this provision?
No, I think this is really in the hands of the investor that whether the income which is going to be there. So for example, when it comes to exchange income is the business income of running that exchange. It is not the purchase and sale that they offer, right? So they only provide a platform for people to be able to do so. I don't think this is going to be an impact on those people. This is directly on the investors who are purchasing and selling cryptocurrencies and making gains and losses out of it. That's the real intent. You may be what I call a compulsive crypto purchaser, where you may argue, I mean, this is a professional income for me, or professional profits and gains from business or profession. Or you may be one of people, you're long-term investor, you're holding this as an asset class, and therefore you may have keep it for longer. All of that is gone. If you're an investor, like Vivek said, you purchase crypto, you sold crypto, the difference between these two, you'll have to pay 30% tax. That's the real intent. Doesn't matter what your category of class is.
Okay, so clearly this is meant for individual investors who are, trading or investing in cryptos. Vivek, does it matter whether you're resident, non-resident? Do any of those complications come in here?
No, look, I mean, if you're non-resident, then there's the whole question of situs, right? Then why are you even subjected to Indian tax? I would assume that if I'm resident in Singapore and I trade in Bitcoins there is no reason for that Bitcoin to be taxed in India, for any income arising from the transfer of that Bitcoin to be taxed in India. So in a sense, therefore, this provision is intended to apply only to Indian residents where there is a basic situs of taxation.
Sure. No, I'm asking all these questions because a lot of people are coming and asking us that, hey, I'm based outside, I did this transaction outside. Is it going to impact me? So, because all of this is new for everybody. So yes. Some of these basic questions also need to get answered. Badri, the calculations is what I'm hoping to now understand from you as to how that will work. Because some people have already invested and sort of made profits or gains in this year. How have those people sort of reported that income? Is it anything that, between now and April 1st that people need to do? How are they better placed before April 1st if they sell, make profits or exit, or April 1st onwards because their fate seems to be sealed at 30%?
I think transaction post 1st April 2022, there's clarity. Okay, yeah. There, I think there's no question about it. For the people prior to that, we have always been saying that either it will be capital gains or it will be your profits and losses, gains and losses from profession and business. Okay, so the main thing that we always say is that for the past, a lot of other issues, for example, if it's capital gains, indexation, and so many other issues which have to be taken into account, people used to argue at some level that these are not goods at all, these are not assets, just transfer of value. It should not be under capital gains, or it should not be. I think those disputes, some of this will continue to happen prior to that. The key thing is that if it is capital gain, then you get certain benefits, deductions. I think definitely for gains made prior to 31st March 2022, okay, there could be benefits depending on what it is. But clearly those are not going to carry forward when you're going into this. I also know a large number of people have taken a view prior to this amendment that no capital gains or business income is payable on purchase and sale of cryptocurrency on the basis machinery provisions are not there, charging section is not clear, and so on and so forth. All of that disappears. I think post 1st April, that regime is going to be there. I think prior to that, it's really going to be based on issues relating to capital gains and business income issues.
So my short point is, are people supposed to sell right now or not? Because that's a big question, right? That, of course, this is an individual sort of assessment of where do you see that asset go. But because there is a gray area, could the tax implication be lesser for people? Let's say they decide to sell before 31st March versus when you go into April 1st regime.
I think generally you will, if you see, for example, the other expenditures and things which are, so one is how to define cost of acquisition is going to be a big issue, I think, in the, and we'll talk about that maybe a little later. But I think what I feel is that now what the government is trying to tax this cryptocurrency is the highest rate that is possible to be taxed on cryptocurrency, according to me, in this structure. Okay. Any other type of sale is going to be at a lower number, that is effective rate of tax on such transaction prior to 1st of April will be lower than this. So based on that, if you want to pay the tax, if you want to sell the cryptos, pay the tax, and then be out of it, by all means. But as you know, these are all asset classes that you hold for investment purposes and so on and so forth. So I don't really have an answer to that. But yes, I think government is trying to tax you at the highest effective rate of tax on these cryptocurrencies going forward. So anything before that is probably going to be a lower rate of tax for you to apply on this asset. I don't know, does that answer your question?
In a very lawyerly way, but I will move on because I'm sort of short on time. Vivek, last word to you. Gift also needs to be taxed in the hands of the recipient. So just final word on when does it need to be, that tax will be applicable when the recipient sells the asset, right?
No, when the recipient receives the asset. So let's say I were to gift 1 Bitcoin to you, you would be taxable at the time I made the gift, even though you may not have realized money value of it. Okay. The government has amended Section 56 of the Act as well to provide for taxation, and the gift will be taxable as soon as the asset comes into your ownership.
Your hands.
Okay. So one big question, like we said, we don't know what happens to losses. Vivek, from the language, any other immediate gray areas, I'm sure you'll discover more as you discuss and analyze these provisions more. Any other immediate gray areas?
So I think Badri spoke about them, right? How do you attribute, is it on specific identification that you attribute cost of acquisition? Do you work out cost of acquisition on FIFO, LIFO, weighted average method? How do you attribute cost of acquisition across a block? Question 1. Question 2, do you see taxability at a block level? Do you see taxability at a composite level basis all transactions in this kind of asset during the year? Or do you see taxability asset transaction by transaction, not even asset by asset, but transaction by transaction? Issue 2. Issue 3, losses and gains, and the law very clearly says it's applicable for April 1, 2023 onwards, which is assessment year, April 1, 2023 onwards, which means April 1, 2022 onwards from a financial year standpoint, which means what happens to transactions prior to that. I agree with Badri, people have been taking all sorts of positions. One reasonable position to have been taken in the context of the current law is that this is a capital asset just like anything else, and therefore we will apply the capital gains tax provisions to it. I think that also opens up because the government has very clearly indicated they want to tax it at maximum marginal rate. Yeah. Now, if I were already holding this as a short-term asset, probably it doesn't matter because I'll be offering to tax 30%. But if I were holding it as a long-term asset and then I was selling it, then there is the whole possibility, I would say, not so conservative, but possibility of taking a 20% tax and 20% plus surcharge, etc. So all those interesting questions still remain. This is this is 115 BBH is a 6-line provision or 7-line provision. Yeah. I mean, we will come up with 2 pages of questions on it.
Yes, of course. As we promised, Badri, I'm sorry, I'm completely out of time here. We will, of course, come back to you guys and, of course, cover more on this on BloombergQuint platform. I don't know how many of your questions we've been able to answer, but as we delve deeper and we get better understanding from the revenue department and what it intends to do, how these computations will work, we promise to come back to you with answers. Thank you so much for joining us here on BloombergQuint, and thank you so much for watching.